This happened last Thursday evening, but I'm going to go back to April to start off with, because Liberation Day on the 2nd of April, when the President announced excuse me, his list of tariffs and the countries that were going to be involved. One of the exemptions was, quote, bullion. And there's been some confusion in the market on an underlying basis ever since then, because bullion's exempt, but how is bullion defined? Is it just gold, silver? Is it platinum? Is it palladium? At the moment, it looks as if all of them are exempt. But what happened last Thursday afternoon, London time, was that one of the Swiss refiners spoke to the United States Customs and Border Protection Authority because they wanted clarity as to whether the 100-ounce and kilobar denominations, which are good delivery on Comex, as opposed to the 400-ounce, which is good delivery Loco London, were subject to tariffs. So the Customs Authority looked at it and decided that because these bars had been cast and they'd got the refiner's chop and then they'd been lasered to make sure that they were the right sort of shape and polish and fineness and all the rest of it, well, not fineness, but shape and polish. Therefore, they had been wrought, or at least up to a point of semi-manufacturers. Therefore, their tariff classification should be changed from X to Y, which meant tariffs. And the Swiss are already pretty hacked off with the United States anyway, because they've been thumped with a 39% reciprocal tariff, which is higher than any other country in the developed world. So hackles rose, as you might imagine. But more to the point, the New York market went into a tailspin, for lack of a better term. There's been a degree of tightness in New York for a while because of concerns about tariff. But what happened on, late Thursday, it was more Friday to be fair, was that the December contract, which is the currently most active contract in the States, went to a premium very briefly of just over $100 over spot, whereas more normally it would be 3 or 4, something like that. But the interesting thing here was that when the president then tweeted, as distinct from an executive order, which is why there's still a little bit of confusion, that gold would not be taxed, it all unwound almost in a matter of minutes. And if you look at a chart of tick by tick or every 3 minutes or so, you can see it just does that, which underpins my view that barring a black swan or something ghastly on the humanitarian front, I still think that we've seen the high. Still a certain amount of confusion, but as of this morning, the premium that you would normally expect, given the level of prevailing interest rates in the background, is back where it should be. So we're pretty much back to normal. It's a function of clarity as much as anything else. Although the president has tweeted, the market would really prefer to see an executive order or a ruling from the Customs Authority. But the underlying issue, which is something I've got a bit of a bee in my bonnet about this one, and I don't think I'm alone either, is the lack of fungibility between Comex good delivery and London good delivery. So if we go back to lockdown, when there were very few planes in the air and people were scrambling to get cargo hold capacity to ship gold into anywhere for that matter, but particularly into the States, we reached a point where Comex had to change their rules slightly. Now, as things stand, you've got good delivery for 100 ounces and for kilo bars, as I said, as distinct from 400 ounce, commonly known as large bars, for the Loco London international markets. And more to the point, any Comex vaulted gold has to be in vaults within 150 miles of New York City. So, of course, during lockdown, that was why people were squabbling. There was one point when I was on a conversation with our Dubai office and our Singapore office, and they were squabbling. They weren't quite squabbling, but one of them was saying, "I want some of that space." And I had to say, "Now, play nicely, children," because there was even competition between branch offices of the same organisation to get space, to get metal from A to B. So what happened eventually was that there was a partial relaxation of the Comex rules, so that large bars could be used as partial delivery against Comex contracts. But that was only temporary. And it strikes me that what we've just seen throws all that back into the spotlight again. And there really should be some kind of, well, in my humble view, there really should be some kind of conversation going on between the LBMA, Comex, and whoever else counts, when there's probably lots of bodies involved, to see if there can be some kind of fungibility, because as far as I'm concerned, it's ludicrous that London bars are not good delivery in New York.